May profits be upon you. We are going to look at the indices. We're going to look at gold, silver, and oil. Okay, this is part two. Do make sure you check out part one, which went over the FX pairs, the euro, the pound, Aussie dollar, New Zealand dollar, USD CAD, USD Swiss, and USD Japanese yen. Right? Okay. Starting off with ES, we're talking about the S&P. Let's look at the weekly. What I want you to see is we had bullish order flow, and then we have this very big bearish engulfer, all right, that traded through the bullish fair value gap here. All right, so that eliminates that. All right, and then the next weekly candle pushed up into the base candle of this bearish engulfer, and then continued bearishly from there. Okay, it failed to make a bearish fair value gap, but on the lower time frames it did. But what I want you to see is that we did get a close past the low of these two up close candles, which forms an area of fair value, otherwise known as a bearish order block. All right, now you see the response here, though. There is a fair value gap right here. If I can just get it right, there was a bullish fair value gap there, and you see the response to it. Now, uh, right off right off the top, you're thinking, okay, it would be simple just to say, well, we're in a bullish fair value gap on the weekly. We should be thinking bullishly. Not so fast, not so fast. All right, if we take a look at the daily, all right, that this weekly fair value gap was traded through to the bottom. All right, now the bottom border of this weekly fair value gap is uh, the daily fair value gap was traded through, as you can see, and you can see also that we have a fair value gap, a very thin one on the daily right here where price is respecting it. And to the tune of Friday, we had a bullish candle form there. Now, what am I thinking? Because we have a bearish fair value gap with an overlapping uh, uh, um, uh, what do you call this? Market structure shift, right? And this area of fair value, okay, that it's intersecting my bearish fair value gap here. So I'm definitely looking for price to tap into this and to continue lower prices. All right, we're going to wait for confirmation, but this fair value gaps that were created here, you can see one here where price traded back up into it, fell down. Price traded. I'm looking for price to do the exact same thing here, to trade back up into it and then uh, possibly go lower. All right. So I have this as my draw on liquidity for the S&P. A little bullishness into the fair value gap and then down. That's what I'm looking for. So I have this going on over here. Okay. If we go to NASDAQ, same deal. All right. If we go to the weekly, you can see the bearish fair value gap here, a drop past this this up close candle here. This would, if you use CISDs, this is the change in the state of delivery here. Once it goes past here, right, and we got that. All right, boom, very bearish. Price push back up into it, the fair value gap, and then uh, produce that very bearish uh, uh, closing candle for last week, right? Into there is a weekly fair value gap that price traded into. I mean a daily, but we'll get to that. What I want you to see is the weekly fair value gap failed. You can see how price traded through it like and just cut through it like it was butter. All right. If we go down to the, I said butter. If we go down to the daily, you can see that we had this down close candle, up close. We created this fair value area here. We have the overlapping uh, 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 CISD. All right. We have that overlapping fair value gap there. Price traded to the bottom of that. All right. And then we had produced this small bullish candle on Friday. What am I looking for? We have this rather large fair value gap here. I'm looking for price to just hit that, trade back into it, boom, and come on down and take out the draw on liquidity, which I believe is this low. All right, the Thursday low. All right, so uh, we have bearish order flow here, so I'm definitely looking for price to continue lower. Okay, if we go to the Dow, I'm not going to spend a lot of time on this, but we have on the weekly, it's easier to see that we have price trading back into a bullish fair value gap, and you see the the wick of respect to that bullish fair value gap, and it looks like prices is uh, looking to go higher from here. All right. Now, in this wick, this bearish wick, all right, you see that price didn't trade through these highs. So that means it has some business to take care of and lower pricing. Well, we came to that lower price. We came to um, a bullish, a bullish array here. And price, price went from external above the high into an internal uh, point of liquidity, which is this bullish fair value gap. I'm looking for price to continue higher. Yeah, on the Dow. All right, we're going to move on though. Gold. Look at the weekly on gold. Price finally broke this important high over here, traded through it. So we're looking for higher prices, right? After a pullback, price didn't. Price pulled back into. Let me get this. Price pulled back into. I gotta ask for it, right? Price pulls back into this bullish fair value gap. All right, on the weekly. So it didn't give the lift that I would expect it to give. All right, it was just enough to sweep that high again, that old high, and then come back into the fair value gap again and push to sweep that high. And we have a longer wick here. Do I expect higher prices in gold? Interesting question. Let me tell you this. Let's look at the daily. Although we are supported by this bullish fair value gap, all right, it's been tapped multiple times. I'm not really considering it anymore for price to continue higher from, because it's failed to do so. It's made higher prices, but only on a technical basis. It didn't see the drive through for higher pricing. So as price is in this consolidation, I'm looking for price to break this consolidation before I look at to start trying to predict something. So what am I looking for? I'm looking for price. You see how it's responding to uh, this fair value gap here. All right, got a bullish candle on Friday into another bearish fair value gap here. All right, that means price is trapped between a bullish and bearish, between two arrays. All right, both both bullish and bearish. So we got to wait till one of these fail. All right, but when I see one fail, if it pushes up this way and comes back, I'm looking to take high prices higher from there. I'm looking to take longs from there. If price comes back, comes down and trades through these bottoms, if it trades through it, I'm waiting for it to come back, and then I can take prices to the downside. So I gave you two things to look for. All right. This is this is a consolidation here, and you got to wait till price breaks it with purpose. All right, and it's not going to be a wick. We're not looking for wicks. We're looking for a candle body close below or above. You understand? Especially above these two fair value gaps, both bullish and bearish. That's as simple as it gets. Okay, that this can get. You want to jump into longs from here? I wouldn't recommend it. I'm not going to do it. All right. Well, you want to jump into shorts? Price did respect that bearish fair value gap. It changed. It traded into it and then continued lower. I'm looking for price to trade into this and see if it holds so that we can go to lower prices because I do believe, I suspect that this is the draw on liquidity, these lows. That's what I'm looking for. So on the lower time frames, I'm going to be looking on the 1 hour to see if we can get something that looks like price is turning over. We'll see. All right. So look for it. Silver. Let's go to the weekly. All right. You can see, um, price is moving in a way that, it consolidates, gets a little, leaks out some. We're not seeing, broad, broad moves, but we are seeing enough to say, to make an assessment, to get a good assessment on the direction of price. What are we looking at here? I see I see greens. All right. All right. I see trees. All right. Let's see. We got a bearish fair value gap here. All right. And you see three bearish candles, 3 weeks of bearishness. All right. That close right on this bullish fair value gap. All right. Now, what I like to point out here is that that swing high did not take out that swing high. Why didn't we see higher pricing? Do I expect the higher pricing to come from this fair value gap? Not so much. Look how deep we went into it. Not so much. So uh, I'm thinking that this failed bullish fair value gap here, after taking out this swing high, all right, after taking out this swing high here, should have pushed price up, should have pushed price high. That's not what we got. All right. So we have a change in the state of delivery here. All right. You can see the bullish candle and then 2 bearish candles and a close below that swing low here. So I am actually expecting lower pricing. All right. So what am I going to be looking for? All right. This is on a weekly now. All right. Let's go to the daily. What are we going to be looking for? Let me clear this up. Remember, we have price at the edge, at the very bottom line of the um, weekly fair value gap. All right. Here is the daily. Price did close below, just below that daily, but right at the bottom border. All right. And we see that price has a very big bearish uh, fair value gap here. What I'm looking at, a bearish fair value gap. What I'm looking at is the possibility that this bullish fair value gap is going to invert over here. All right. Not for me, I don't trade those, but only because uh, there's a bearish fair value gap over here. I just trade that one. You understand? I don't want to complicate things. You can do inversions if you like. If that's your thing, that's your thing. You know, I'm not saying that they don't work. They're not useful. They can be, but I have a bearish fair value gap over here with the intersecting uh, swing low. All right, and that's usually when they overlap each other. That's usually pretty good for bearish pricing. So I'm looking for price to trade back up into here and then target that low over here. So this is going to be my ultimate target. All right, this is silver. I'm looking for silver to continue bearishly. All right. Uh, 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 there is an already used bullish fair value gap under here, but we've already traded into it. I'm looking at this floor being being pretty weak. If this bearish fair value gap fails, then I'll be looking for price to give me a bullish fair value gaps here for us to trade off of to take prices higher. But barring that, it looks like bearish order flow. We have bearish fair value gaps that are being that are being respected, and bullish ones over here that are being disrespected. I'm looking for price to continue lower, and the first draw on liquidity will be Thursday's low right there. What did I just do? Okay. All right. And let's see. Yeah. So, and then this one, I'm looking at as the point for uh this failed swing high. The swing failure is what I call it. All right. Anyway, so if I can just convert that into what I want to, thank you very much. All right, let's go to oil. All right, oil. If we go to the weekly, look at this high, look at that high, which is lower. Look at that high, which is lower. Look at this higher low. Look at this higher low relative to that one, relative to this one. All right. You know, it doesn't matter that we're creating a wedge. It's just that you can't fully trust the fair value gaps. All right. Because price is consolidating. Look, if you can get out of this. So you can see there was a bearish fair value gap there, and price traded back into it, went to lower prices, and then we started to swing back up, creating a bullish fair value gap here, which I have circled. All right, this is on a weekly now. All right, but what I also noticed too is that price traded through bullish fair value gaps here, right? Traded through. That's a fail. This one's it just got eliminated. So we're here now. Do I expect price to swing up higher from here? Not necessarily, because price should have expanded from here. All right. It didn't. It failed. All right. We're going to come down and we're going to test this this swing low here. All right. If we go to the daily, I'm looking at is I tell you what, I was looking at this as a big old unicorn. Look at that. All right. We have the up candle, down close candles, sweep of liquidity. Then we pushed up higher. I was looking for price to continue higher up here. It didn't. All right. There is a fair value gap here. Right. And then there's another one down here. Okay. This is the weekly one that I was pointing out earlier. I've just expanded here on the daily, and we may see price turn around. There's potential for price to turn around, but because we went past this fair value gap, we got to fail on that one already, and we didn't push price higher from up here. All right, with this breaker, this breaker block, I'm not. I don't have a lot of confidence in this last line of defense here, but we'll see. I would suggest we wait. But we have without all of this, oh man, without all of that, I want to show you that we have uh, bearish fair bearish order flow here. All right, that's a bearish fair value gap. So I'm actually leaning more towards price going lower. Price should have expanded with this candle higher. It did not. And the wick is being filled. So I'm looking for lower pricing, at least down to this fair value gap. Thank you for watching the video.